And now we start the technical analysis stuff. So some people, yep, like Melon, wanted to learn about the 2022 model unicorn. So we're going to quickly go over that. Now, we're not going to go into all of the details for the 2022 model, just because I've gone over that in the A+ framework and in different videos, like the one-on-one with Bossman. But we'll go over what makes a unicorn. So as we know, the 2022 model starts with a stop rate, a shift, a retracement, and a displacement. Visually, this is how it looks like. Super simple. The stop rate will always be when price takes out a swing low or swing high, followed with a displacement towards the previous swing high or swing low. This would be the stop, this would be the shift. Right after that, you want to look for the retracement to any sort of PD array. Volume imbalance, order block, fair value gap, BPR, inversion, any sort of PD array. That's your lovely 2022 model for an entry point or potential reversal. Now, what makes a unicorn? A unicorn is a breaker or mitigation block essentially infused into the 2022 model. And the way that it looks like is like this. We have a push up. Right here, we make a bearish order block. Sends price lower. Price makes a stop rate. Now, as price comes back higher, instead of respecting that order block, it runs right through it. It invalidates it. This now turns, depending if it took out liquidity before making the order block, or if it didn't take out liquidity, either a mitigation block or a breaker block. Once that is made, you want to see if this PD array is confluencing with a fair value gap. Let's say there's a fair value gap right there. This would be the 2022 model. You look for your entry essentially within the 50% of both of these, and that is kind of like a higher probability version of a 2022. Pretty simple. Now, I'd say breakers a lot better than mitigation blocks. Why? Because breakers, the difference is that they also sweep liquidity. So let's do this like that. Let's say this was a high. This high was swept, and that made the order block. Then it became invalidated, so this became a breaker. But what if it was like this instead? You can see the difference. No high is swept, but we still had an order block that displaced price lower, made the stop rate, became inversed. So that's a mitigation block. Very simple. So, difference between breaker takes liquidity. It's the order block that took liquidity before expanding. Mitigation block did not take liquidity. It was just an order block that got invalidated. They are still unicorns. Preferably you want a unicorn with a breaker. Now, remember, these are entry models. These don't necessarily direct the draw of liquidity. With the draw of liquidity, they're powerful. Ideally, they're better than 2022 models. These are like the premium version of them, the top tier version of them. But these are entry models. This is how it visually looks drawn. Let's see if we can find some examples. All right, here we have one. So this is a breaker. It was a bearish order block that sent price lower, which took out this low as a stop rate. Keep in mind that this was the liquidity it swept previously. That's why it's a breaker. Price expanded, invalidated the order block, made a market structure shift. Then it retraced into the breaker, and we also had a fair value gap right here, which made this a unicorn for upside. Are those blocks just one candle or the sequence of candles in the same direction more than one? It's one candle. It's the previous candle before an expansion. So the way that it would look like, pretty simple. Let's try and find some neat examples. So this one right here, for example. This is the previous green candle before the red moved down. This would be our bearish order block. You measure it by body. That would be it. This is the last bearish candle before an upside move. You measure it by body. This would be the bullish order block. Now ideally, you can trade these. A lot of people do. But you want to prioritize the 50% over anything. You could actually make your soft stop if price closes below the 50% of the order block, because ideally order blocks should be really respected. So if price pushes down, you want this to be absolutely respected. If price is closing below the 50%, it's a heads up that it's going to go probably for the low. Now that's a unicorn example right there for the upside. Let's see if we can find a bearish one real quick. I want to find a pretty one so that we can have that as our best example. I guess this one would work. So swept liquidity, order block is made right here, price shot up, came back down, invalidated it, eventually retraced back into it, but in that same area it had a fair value gap. This was a unicorn short setup. See how it has a similar sequence every single time? Because really the only difference, it's a literal 2022 model, but with a failed order block in it, or an order block that was previously invalidated. Well, you could do an entry, but I'd say that would be really aggressive, because as it invalidates it, it's technically taking a low. So let's say this one right here, right? It invalidates this order block, but that order block also has the low. So what if price takes the low and immediately shoots up against you? So it doesn't really, I mean, you could, but I'd say that's pretty risky. So for me, it's definitely best to wait for the retracement of a retest of the fair value gap or the OB. I still have difficult time seeing shorts, but it's good seeing long setups. Honestly, I think what Jess did was pretty smart. If you're having a difficulty to find the framework to where there's a trend, invert the chart. If you invert it and you see the exact same setup that you would take if you were the opposite bias, then well, okay, well, you're mobile. I don't know how to do that either then. Yes, Parvis. There you go. There's your there's your assistance. Just flip the phone. And if you see the model right there, if you were to flip your phone, then you know. All right. What other thing do we have yet to talk about? trying to see what some people have sent me messages over things they wanted me to talk about, so I'm trying to remember. Okay, let's talk about scaling out and how to have confidence to hold a trade. So, a tip for how to know to what extent to hold a trade if you're catching the bottom or the top of the market per se, specifically. Because of course, you know, we have our internal liquidities and our external liquidities as targets that we do when we take our normal trades within the middle of the range, or pushing towards a new high or pushing towards a new low. But what if we're trying to catch a reversal, right? What if we're trying to catch the very top before a reversal is made, or the very bottom before a reversal is made? How can we measure what would be the high confidence targets to hold towards? Because it's hard to know if it's actually going to reverse, first of all, and it's hard to know if it's going to go for the absolute highest point of the external liquidity in the swing that it made. I think a good tip to be able to hold is the premium and discount tool. If you have the premium discount tool shown up, for example right here, when we were long, this is OTE. Premium starts at this point. So for me, if I'm catching the very bottom, I can relatively confidently rely on that price is going to try and go from a discount to a premium first. After the premium, then you get into territory where it might go against you. But this can be a reliable hold to just straight up hold it till this point first. Right after that, then you can kind of maneuver around with OTE and certain PD rates that you have right around there. I think this would be the first and strongest recommendation. This is actually what made me be confident that we were going to go towards the 5-minute CIVI to begin with. I saw that the premium matched with the 5-minute CIVI in this point. So if it matched, then the likelihood that if price wanted to really go short again, it was going to be here in that area. And that's why after we got our entry, we held that until we hit this point. Now after that, we had the assumption it was going to go to midnight, which it did. It ended up hitting midnight and then sold off a bit. And that was it for me. But I saw that after invalidated everything else, it just continued going on. So when it comes to holding, you want to see a consistent invalidation of bearish structure, let's say for longs. Consistent invalidation of bearish structure, and you want to see price go from premium to discount, or discount to premium. Similar way, the longs. After the longs worked, you can see that the premium of the range stretched out a lot. Let's say from this swing point right here. So if you wanted to go long, ideally you do kind of want price to come back down here first. Or if you're trying to short here, you can have your targets around here, but you can think that, okay, it's most likely going to come down to discount first before shooting right back up. It's a nice little tool. It's not 100% all the time, as we can see here. Price never came back to discount first before going higher. But when it comes to catching the bottoms or the tops, it can help you not run out the moment internal liquidity is hit. Because of course, internal liquidity is everywhere, right? We have some here, we have some here, but you want to emphasize more on the key PD arrays that match with high time frame. Those are the areas that you want to emphasize more for the hold. Once those are hit, obviously scale out, exit, do whatever you're comfortable with, and then wait for more data for the continuation of your trade idea, or just hold runners if you want to hold runners. In this case, what we did here, right, we waited for more data. It hit my 5-minute CIVI, it hit the premium of the range, I exited. Well, I tried to actually add more, but then I exited because I thought it was going to potentially reverse. But once it confirmed that no, it's going to continue, aim for a key target. I held that till the key target, and then we had our happy ending. That would be my recommendation for holding them on reversal circumstances. Premium first or discount first, and then the extra little details that comes with important PDA rates. You kind of, I'd say you can kind of confidently ignore internal liquidity. You want to prioritize more just key PDA rates in like 5-minute, 50-minute time frame, or midnight, 9:53, 10:34, those sort of things. I would say you also don't really want to be stubborn with certain things. You want to be open to both frameworks that happen, because again, you don't know if it's a reversal or if it's a continuation. This is simply a retracement. I have no way of knowing if us tapping this CB right here is going to send this lower or not. I know that we have a very high likelihood to reach it, but after that, I don't know if it's going to continue going lower or not. I need to see more data for that. But I can't be married to I can't be married to my bias to believe that it's gonna 100% going to reverse just because I say so. I need to see justification for that. So a way that you can also prevent yourself from having that tunnel vision and securing some gains, or at least, let's say, not putting yourself in a position where you overhold the trade because you stubbornly think that it's gonna pop and pop and pop, but it doesn't, would be have an open mind for both sides and see the bearish outlook and the justification to why bearish shorts could work. Oh, it hit the 5-minute CB. Oh, it made a Q3 inverse. That's perfectly reasonable for price to short and go lower against you. So at that point, okay, I see a bearish model. If I'm not going to participate in the bearish model, but I really want to hold this trade, you raise your stop loss to profit to an area where it would invalidate the long setup. Where would it invalidate the long setup? At this low, because this would be the unicorn that should send price even higher. If this fails, it's going here, and if it takes out that, it's most likely going here. Simple structure. That way you avoid price basically just running all the way back against you. Now this is when price action is clean. Of course, it's going to be a lot harder to do that if, let's say, you're in here, or you put your stop here, and you're waiting to see if this is respected, but then it just knifes. We can't do anything against that. It's just one of those circumstances. Miserable, but it's going to happen. And it's good to have those realistic standards. It's going to happen. It's happened to me live multiple times that we're in a winning trade and then bam, knife. But when price action is good, you want to have that open-mindedness for what you want to see. I was open-minded enough to exit my longs because I saw, oh crap, we closed below the busy. Q3 is right there. We can drop. So I did. I even entered short. Oh, invalidated the busy, returned. Never mind, it's going up. Flip flop, take some paper cuts. Again, you have to be okay with being wrong. This is why it's super relieving to be able to trade with breathing room, because paper cuts, they don't mean anything. Of course, you lose a little bit of gains, but if you're trading the overall draw of liquidity and the idea hasn't completed, there's a lot more that can be made. I knew that, okay, yeah, I lost 14 points here, I lost another 11 points here, but if I'm going to take the trade again, I can make 67 points. It's absolutely worth it, risk to reward wise. So you give yourself that breathing room, you give yourself the spatial awareness of being wrong or being right in your idea, as well as the framework of what can make the idea work, and you're able to hold a lot easier. If you just don't want to, let's say, even flip-flop, and you want to believe, okay, I think my idea is definitely going to work, then you trail your stop according to the structure right before you. You do not be stubborn hoping that the structure is going to do a certain thing, because you might just get ran through and get hurt. The structure will tell you, if it's clean price action, very easily, like, okay, if I want longs, I need to see this be respected. I always say in stream, this has to respect. Bam, respected, perfect, I'm holding it. Oh, I don't like it, it's not respecting it, I'm out. Like right here, when we went long the very first time. I entered long here, no, price is failing to expand. Oh, pushed underneath here, I'm not taking the chance, I'm out. Didn't even wait for the hard stop, I exited right there for like a 14-point loss. What about Where was it? We entered long again, pretty sure. Did we? Yes. We entered, I think we entered long again, but then price didn't do what I wanted, so I immediately got out. I'm not entirely sure, but I think I did. But then the second one, okay, price needs to respect here. Respect it, you hold that crap. Don't marry any ideas. Be nimble. Go with the structure. And that way you can kind of manage everything a little bit better. And of course, have breathing room always. Even in the occasion, you know, you guys see me, I do my manual stop losses. I am aware that at some point, Nasdaq might be a prick, like what happened that one day when we were trading the news, and it straight up knifed, and I'm doing a manual stop loss, so I ate that entire 80-point knife. But because I was doing a certain sizing, it didn't blow up my account. It did hurt me, but it didn't hurt me enough to lose. It hurt me enough to, okay, I have to take a more conservative route and try and make it back, or at least try and lessen the blow. A lot less stressful. What else could we go through? Or do you guys have any questions? Because I am kind of running out of ideas. I see some typing in the chat, so we're going to wait for that. Do I have any lessons in standard deviations? I do. I'm not sure if I have them titled. I think I do, but I have done it in my education section. And the daily bias has also been done. I do believe I titled that one. I just got here, so I'm not sure what you've already went through, but do you watch the 5-minute or 15-minute time frame? A lot of the live streams I see you focusing on the 1 minute. Yes, I use the 5-minute and 50-minute time frame for my structure. So ideally, the 4-hour and 1-hour time frame you want to use, I use it for my bias because I'm a day trader. I want to catch the expansions of the 4-hour time frame. So essentially what I'm trying to do is I'm trying to catch the expansion that happens at 10 a.m. or at 2 p.m. And that's why I usually start my streams at 10, because I was trying to catch the distribution of that. But I use the 50-minute and 5-minute as my mid structure to give me the confirmation of trend, and I use the 1 minute for the dance to get there, the ignition that starts those moves. That one specifically, I go over it through the how to identify an A+ framework. I just kind of glance at it. I don't feel like I need to really look at it unless I'm trading a specific 5-minute model. So I just glance at it and then I hop in the 1 minute because I see all of the information I need. But that's experience. That's straight up experience. I've done it so many times that I'm so used to it. If you're not experienced enough, I definitely recommend keeping an eye on it so you have your mid-time frame structure set in your head. The 1 minute should always just be treated for entries, never for the draw, never for the bias. You can't rely on a 1 minute time frame to have your bias on where the direction is going to go. To rely on the 1 minute to try and tell where the 4-hour candle or 1-hour candle is going is really hard and not really reliable. That's why 5-minute and 50-minute time frame are the best for that. 1 minute should always just be doing for entries or for management, I'd say. Because you got to think of it with the bow and arrow analogy. The bow is the hourly time frame. The way that you pull the string is the mid time frame. But letting go of the arrow, that's the 1 minute. Alrighty, if no more questions, then that is the end of this class. I will try and do them more consistent again. This week we're going to be doing a lot more. I hope you guys have a good rest of your night, and I will see you guys tomorrow. Bye-bye.